Welcome to episode 9 of Dhanmantra. In this episode, we want to discuss about stock exchanges and indices like BSE Sensex and Nifty 50. Let's start with learning about stock exchanges. The stock exchange is organized and regulated financial markets where you can buy or sell listed securities like stocks and bonds. So BSE stands for Bombay Stock Exchange. It was established in 1875. It is located on Dalal Street in Bombay. It has some 7,000 plus listed securities and it is one of the oldest exchange in Asia. NSE stands for National Stock Exchange. It was incorporated in 1992. It is located in Mumbai. It is the largest stock exchange in terms of daily turnover. So the most active and liquid securities are listed on NSE. It has some 1900 plus securities listed on it. Now let's learn about the index. What is an index and which are the most commonly tracked indices?
Well, index is an indicator. So generally it measures or tracks something. So in stock market, it gives you a feeler or it gives you an indication where the stock markets are headed, whether it is going up or whether it is going down, so that accordingly you can take your decisions. Well, sensitivity index or Sensex as it is popularly known as is a market index of 30 largest and most actively traded stocks on Bombay Stock Exchange. It started in 1986 with 100 points and now it is currently trading at around 36,800 points. Nifty comprises of two words, national and 50. So it is a market index of 50 largest companies by market capitalization on National Stock Exchange. This index was launched in 1996 and it started trading from 1000 points and currently it is trading at 10,700 points.
Is the stock market limited to only Sensex and Nifty or are there any other types of indices? The most tracked index generally are Sensex and Nifty, but they only cover the top 30 or the 50 companies. But markets are much deeper than just these 30 or 50 companies. So if you want to know the performance of mid cap or small cap, you can track BSE mid cap or BSE small cap. And now if you want to know the performance of any sector, let's say auto sector or pharma sector, so there are respective indices for that also, like BSE auto or BSE pharma. So there are plethora of indices through which you can track respective market cap or different sectors. We see that the indices are made up of stocks as per their market cap. Let's find out what is market cap.
Market capitalization or market cap as it is called in short form is the market value of the outstanding shares of a company. It indicates the size of the company and it is calculated by multiplying number of outstanding shares of the company by the current market price. So going by market capitalization, Reliance and TCS are two big companies and their market capitalization stands at 7,88,000 crores and for TCS it is 7,62,000 crores.
Now that we know what is an index, let's learn the utility of an index.
Hi, the primary use of the index is to track the market sentiments. So if you are tracking any particular index, let's say for example BSE Sensex 30, so you can see if that index is going up, that means the large cap companies of the economy are doing well. Whereas if you are tracking the mid cap index and you are seeing that the mid cap index is going down, that means the sentiments are not in the favor of the mid cap companies. The second utility of the indices is that they track the top performers of that particular index or the sector. For example, BSE Sensex tracks the top 30 companies, the top 30 large cap or the blue chip companies. Now, due to some reasons, if the company performance dwindles, then they are replaced with the companies which have better market capitalization. For example, in 2016, Vedanta was taken out and it was replaced with Eicher Motors. Similarly, Keynes India was taken out, and then also PNB was also taken out, and then in that, like, we replaced it with Aurobindo Pharma and Bharti Airtel. The third utility of the indexes is that they are used for benchmarking. Benchmarking means comparison. So, for example, if your portfolio or your selected mutual fund is performing lesser than the benchmark, I mean, if your mutual fund, a large cap mutual fund, is performing less than the BSE Sensex, that means you might have to give it a second thought.
How can one invest in an index? Let's find out. And what is an approximate performance of the BSE Sensex over long term?
Many times investors ask if they want to invest in the top 30 companies or in the index companies. So for that, the best way is to invest in the mutual funds, which are known as ETF. ETF are the exchange trading funds. For example, Sensex ETF or Nifty 50 ETF, they track the index and they invest in the companies which are listed in the index. For example, the BSE Sensex has given around 15% annualized return over a long period of time. So you can expect, like, whatever is the return in the index will be the return which in your ETF.
Now that you have learned about indices, feel free to compare your portfolios with the respective benchmarks. Team Dhanmantra wishes you happy investing journey. Thank you.